I tell you what, though, it's quite nice to cover a company that's not clouded by an Amazon threat. So happy days. So in terms of what we've done in this report, firstly, we've upgraded our underlying assumptions basically across every business in FY17, which has resulted in NPAT being upgraded by around 7%. So that's around the midpoint of the company's recent upgrade to its prospectus range of 5 to 10%. The company wasn't overly specific in terms of what was driving the upgrade, except to say that it's been pretty well broad-based. So we've done the same thing with our numbers. Clearly, the underlying business, though, is trading very well. I'd expect the Lions tour in the New Zealand to boost activity further in that region. The next thing reflected in our forecast is the acquisition, so mopping up the 80% of Canadream they didn't already own, and Kratzmann's in Australia. So clearly mopping up the rest of Canadream made complete logical sense. You're locking in management, getting 100% of the earnings. You've got that close association with your American business, and really formalising the cooperation between those two businesses should be quite valuable going forward. The pro forma forecast for Canadream did not factor in any cost synergies. At the moment, Canadream is a listed company, so I expect they will come through at some point and provide a bit of earnings upside as they do. The acquisition of Kratzmann in Australia clearly just further aligns with their strategy at the time of the IPO of growing further into these new RV sales. ATL will now leverage its strong, well-known existing brands through these sales channels in Kratzmann's and in Sydney RV, which they acquired earlier this year, and that should provide a bit of a kicker to earnings going forward, which is reflected in our numbers. So based on our estimates, the two acquisitions in isolation are around 4.5% accretive in FY18. However, with the result, the company has also announced they're moving into a new, bigger manufacturing facility in Brisbane. This adds around $1 million of incremental lease costs, so we need to factor that in as well. So the actual accretion you'll see in FY18, including that, is now 1%. I would say next year they will move out of their existing facility as well, so you'll get a bit of that $1 million of incremental costs back next year and the year after. So looking at the business today, it's trading on 12.3 times PE, FY18 that is, offerings circa 18% EPS growth, obviously getting a bit of an extra kicker from these acquisitions in that year, and offering a 4% fully franked yield. So the fundamentals are clearly very attractive. I believe the business, looking forward before you factor in any additional acquisitions, the base business should be able to achieve, a double-digit circa 10% EPS growth through a cycle. Within that, clearly North America will be growing faster than the rest of the business as they grow down the East Coast and formalise that agreement with the Canadian business as well. But in the background, New Zealand and Australia are clearly growing quite nicely as well. I would highlight they've got a really successful and proven model here, and I would have thought they'll move into Europe at some time in the future. In my view, I've said it before, they're only a very few amount of real structural growth drivers, particularly domestically, and inbound tourism growth is one of them, and this is one of the best pure play ways to play that theme. Our price target is now $1.52, so that's circa 17% upside from the current share price, 28% upside from the $1.18 entitlement offer price. We see no reason really why ATL can't hold its current FY17 multiple into FY18, which would see the stock trade at our valuation of 152 and only a 14.3 times FY18 PE. So we're comfortable anyway. We kind of cut the numbers at this point. Just an aside, I'll point out one of the big RV only new sales companies in the US, Thor Industries, it recently reported its quarterly stock was up 10% on the day. They recently acquired Jayco, but in the background, their organic growth in towable organic sales was 13.8%, and the RV motorised organic sales was 28%. So clearly the Australian market is growing very nicely, and now this business, ATL, is very well positioned to take a piece of that action as well. So I'd refer you to the note, but very comfortable with this growth story and attractive yield and good management team.